AMD's stock is up nearly 25%, adding over $60 billion in market cap on news that OpenAI will deploy 6 gigawatts worth of multiple generations of AMD's GPUs for training and running OpenAI's next generation models. AMD believes this is going to add tens of billions of dollars in revenues. Great news, right? But there's a catch. AMD has issued warrants at 1 cent each, practically free, to OpenAI, and that will allow them to take an up to 10% stake in AMD. Now, that's worth about $27 billion before this deal and about $33 billion on the post announcement value. While the warrant investing is based on milestones, the question is who got the better deal? And to understand this, let's look at AMD's valuation before the transaction. AMD was trading at approximately 10 times annual revenues, market cap of about $268 billion, and revenues of about $25 billion before this announcement. And depending on how much revenue accretion AMD actually gets and how much of the warrants that eventually vest, OpenAI will most likely get a disproportionately larger share of the value creation compared to existing shareholders. And while we acknowledge the possibility of better growth through this strategic validation on this transaction, it's OpenAI that appears to have gotten a better deal. And this deal also poses, at least in our view, a bigger question of circular deals, a blurring of lines between vendors and shareholders. And not unusual, but not all that common either, and comes with potential governance risks down the road. Investors are clearly celebrating the deal, and this probably reflects the strategic validation for AMD as much as the revenue accretion they get out of this. This is Sunil Garg from Lighthouse Canton.